Hello friends, in this video, let's understand the challenges a beginner faces when investing in the stock market with the help of a scenario. Sarah is a 30-year-old marketing professional with a steady job and some disposable income. Inspired by stories of colleagues making quick profits in the stock market, she decides to invest her savings of $10,000. However, Sarah has limited knowledge of investing and is prone to making decisions based on her emotions rather than informed analysis. The start. Sarah opens an online brokerage account and begins exploring stock options. She stumbles upon a popular social media platform, TrendWave Inc., which has been making headlines due to its explosive user growth. Caught up in the excitement, Sarah invests $5,000 in TrendWave Inc. without conducting thorough research on the company's financial health or market position. First emotional decision. Riding the wave. Initially, Sarah's investment seems promising. TrendWave's stock price climbs rapidly, and within a few weeks, her investment grows by 20%. Elated by the quick gains, Sarah decides to invest another $3,000 in the same stock, hoping to ride the wave of success. Her decision is driven more by the fear of missing out on further gains than by rational analysis. Second emotional decision. Panic selling. A month later, TrendWave Inc. faces unexpected regulatory scrutiny, causing its stock price to plummet by 30% overnight. Sarah wakes up to see her investment drastically reduced in value. Panic sets in as she watches the price drop further throughout the day. Overwhelmed by fear and anxiety, she decides to sell all her shares at a significant loss, locking in her losses. Seeking quick recovery. Desperate to recover her losses, Sarah scours financial news and forums for the next big opportunity. She comes across a biotech company, Medicure, which is rumored to have a breakthrough drug awaiting approval. Without conducting due diligence, Sarah hastily invests her remaining $2,000 in Medicure, driven by hope and desperation. Emotional highs and lows. For a brief period, Medicure stock shows promising signs, and Sarah's investment increases by 15%. Her optimism is restored, and she starts daydreaming about recouping her losses and making a substantial profit. However, a few weeks later, the drug approval gets delayed due to additional clinical trials, causing the stock price to drop sharply. Sarah's investment loses 25% of its value, and she is once again gripped by fear and uncertainty. Turning point. Learning from mistakes. Feeling defeated, Sarah takes a step back to reflect on her investment journey. She realizes that her decisions have been driven by emotional reactions rather than informed analysis. Determined to change her approach, she decides to educate herself about investing. Sarah starts reading books on investment strategies, follows financial news, and enrolls in an online course on stock market fundamentals. Developing a rational strategy. Armed with new knowledge, Sarah begins to understand the importance of diversification, risk management, and long-term perspective. She devises a rational investment strategy and decides to reinvest in the market, but this time with a well-thought-out plan. Sarah allocates her funds across a diversified portfolio, including index funds, blue-chip stocks, and a few high-growth opportunities, ensuring she spreads her risk. Sticking to the plan. Sarah's new approach involves setting clear investment goals and sticking to them, even during market fluctuations. She starts tracking her investments regularly, but avoids making impulsive decisions based on short-term market movements. Sarah learns to manage her emotions better, using her knowledge and strategy to guide her decisions rather than succumbing to fear and greed. Emotional control. Facing market volatility. A few months later, the market experiences a significant downturn due to global economic uncertainties. While her portfolio takes a hit, Sarah remains calm and refrains from panic selling. She reviews her investment strategy, reassures herself of her long-term goals, and even sees the downturn as an opportunity to buy quality stocks at lower prices. Gradual recovery and growth. Over time, Sarah's disciplined approach begins to pay off. Her diversified portfolio starts recovering, and she sees steady growth in her investments. Sarah feels more confident and in control, knowing that her decisions are based on informed analysis and a solid strategy rather than emotional impulses. Key takeaways. Sarah's journey highlights the pitfalls of emotional decision-making in the stock market. Initially driven by fear, greed, and desperation, she experienced significant losses. However, by reflecting on her mistakes, educating herself, and developing a rational investment strategy, Sarah managed to turn her investment journey around. Her story underscores the importance of emotional control, informed decision-making, and long-term planning in achieving investment success.